So in this video, I wanted to talk about share purchase plan offers and other capital raisings, and then specifically I'll be talking about NAB's share purchase plan offer that they currently have. So yes, full disclosure, I will be participating in this one. I'm actually currently just waiting to sell some other shares to free up the cash. So I'm going to explain in this video why I'm buying into this one and just generally about why I think some share purchase plans are a good offer. I'll also talk about how you can profit both from short and long term with these types of plans. So hopefully it will be helpful for you in making your own decisions about what you want to do. As always, this is intended as general advice. You need to do your own due diligence before making any financial decisions. Just because I do something doesn't mean that you have to. Also, it's worth noting I don't get any incentive or anything from doing this video. I'm just stating my opinion. Oh, apart from the YouTube ad revenue that I put on all my videos. I'm just stating my opinion why I'm buying into this particular one, mostly so you can see my thought process and my decision making in case that is helpful. But remember, you make your own decisions. So companies will offer share purchase plan deals like this to raise capital. That's why NAB is doing it. They want more cash on hand right now. So NAB want to raise 3.5 billion through their capital raising, although for us regular shareholders, they only want 500 million. The other 3 billion is going to institutional investors. And if you don't know what institutional investors are, it's just like fund managers, superannuation companies. They're big players in the stock market. So the offer is open to all existing shareholders. You have to be a shareholder to get these types of deals. And most share purchase plan offers have a set amount that you can buy up to. In NAB's case, that's up to $30,000. It doesn't mean that you'll get the full $30,000. It depends on how many people participate in the offer. You could get that amount or you could get less. Again, depends on how many people are taking up the offer. They only want 500 million from us. The reason I like share purchase plan offers is that you're buying at a discount to the regular market price. That's the case with NAB. They're currently offering, the share purchase price offer is $14.15. And since the current market price is over $16, that's a pretty good discount. There's also a clause that if it drops below that amount, you're guaranteed at least a 2% discount. So what's the benefit of share purchase plans? Like I said, most of the time you're buying at a discount to the current market price. The other benefit is that you're not getting any transaction costs, no brokerage costs, so you're buying them without any extra fees or charges. And the benefit to the company is that they get to raise capital really quickly and easily. So why I'm participating in this one is because I think it's a pretty good deal. However, like all share purchase plan offers, I like to put my application in right at the last moment. The reason for this, and the reason I think most people should wait until the last minute, is just to keep an eye on what the current market price is doing. If for some reason it dropped really dramatically in the next week or two by $2 or something, then obviously you'd have to consider whether you still wanted to go ahead. So how do you profit from share purchase plan offers and capital raisings like this? So first we're going to assume that you are buying at a discount. There are two main ways to profit, either short-term or long-term. So let's look at short-term first, because I think this is what most people do. So a lot of people take up the offer at the discount price, and once they hold the shares and have them at that price, will then go back and sell them back to the market at the market price. By doing so, they can instantly lock in that profit and it's all good. You will notice a lot of people do this because once the shares are allocated, the share price will drop a little bit as everyone's selling to lock in that profit, but it usually doesn't last that long. Now, this strategy obviously is going to backfire if the share market and the price goes below what the offer is that you've received the shares for. That has happened before, but we are in a pretty volatile market right now, so it's hard to know whether this strategy is going to work. It really depends a lot on what the stock market's going to do over the next couple of months. If it remains stable or goes up, then obviously you're going to make a profit, but if it goes down, if it falls, then you may not. So let's look at long term. So long term, it means that you get to increase your holdings at a discount. And since I'm a dividend investor, it means that I can buy the shares lower and my return is going to be higher. Because we know that the cheaper that you buy the shares, the better that your dividend return is going to be over time. It is worth noting that you won't get the next NAB dividend from the shares from this offer, but you will for all future dividend payments down the line. Of course, that also relies on the banks and National Australia Bank in particular, returning to full earnings and recovering their dividend payments. But with such a good capital raising, they're going to have the cash on hand to get through the rocky period, so they're in a pretty good position. And as a long-term investor, you've got time to wait that out. So are all share purchase plan offers worth buying? Now, I participate in a lot of them, but not all of them. Sometimes I just don't want to buy any more of that company for whatever reason. Maybe I don't want an unbalanced portfolio, or it's just not a company that I'm interested in holding long-term. But most of the time, I won't participate if I don't think the discount is good enough. So for that reason, it is worth watching the current market price just to make sure that the discount is good, and leaving things to the last minute just to make sure. Now, clearly most companies that do this will offer a discount. It's in their benefit to do so, but you still need to evaluate the price that they're offering and the current market price to see what kind of discount that you're going to get. So Macquarie Group actually did a study that was published in the Australian Financial Review. It is behind a paywall, but I'll link the article below. The basis of the study was looking at all the capital raisings that have been done in Australia since March 18th, so during the COVID period. So 3/4 of those companies are trading above the offer price, and the average return return on those is 17%, which is pretty good. So for the most part, they do work well. So that's what I'll be doing. I am participating. I think the discount is good, and I quite like the banks anyway for their dividends. I'm not doing it to lock in the short-term profit. I'm doing it as a long-term investor, but I can see the benefits of that strategy as well. So that's my thought process on this. I hope you found it useful. I hope you have a great day. I wish you the best, and I'll see you in the next video. Take care. Bye.